Okay, we're going to get rolling here today, and I got to tell you, last week I was really looking forward to coming on here after the supply-demand report, because usually this January crop report gives us some good numbers to go through, and I got to tell you, oh boy, I'm sure disappointed. There just really isn't a lot there on this report. There's a few small things that we're going to go through in here, but it's I got to admit it's going to be tough to make this report exciting to talk about. But I'm going to give her a whirl in here right now. These are just a few things. There's just some minor changes in here in the U.S. I mean, this really isn't that big of a deal in here. I mean, very few changes on the yield side of it. Beans up slightly. I mean, I think this is the first time that the USDA has never changed a corn yield from the November report to right now, or the DEES report to right now. I mean, that just was a bit odd. You'd think you'd see some changes in here. But at the end of the day, the corn ending carryout went up almost 50 million bushels. Beans up 10 million, wheat up 30 million bushels. Maybe the wheat number was a little bit stronger than we thought. But again, this was kind of some boring numbers in here from a U.S. standpoint. On the other hand, the USDA was a little more aggressive when we looked at what was going on down in South America. They dropped the Brazilian bean crop, by 184 million bushels. I know everyone else is going to say it's dropped 5 million metric ton. But I got to tell you, I like using numbers that we understand, and it's a lot easier for us to explain it to you in millions of bushels than going to millions of metric tons. So, I mean, that's what we're going to do as we move forward in here right now. The Brazil corn crop was down 118 million bushels. Bean production in Argentina dropped off 110 million, but just a very minor change in here on the Argentina corn production, down 20 million bushels. You need to keep in mind from a weather standpoint in Argentina, as they're just getting their crops planted or finishing up in here. This is more like early June weather for them regarding their bean and corn production, not July or August. So I think that's why the USDA was a little bit slower, especially in lowering their corn number down. As we look ahead here, we're just going to go on the corn side of it. Again, production went up 53 million bushels. They bumped the acreage up some. Not a surprise to us that ethanol demand was jumped by 75 million bushels. I mean, we could have thought it could even jumped up 100 million. That's fine. We have to say we're surprised, though, that the USDA came in and lowered exports by 75 million bushels. I know on beans they left them the same, and the justification is with a smaller South American crop, our bean exports should hold together. Well, they lowered the corn crop down there, but dropped our exports. I mean, I got to respect the number. I think that's a little bit early. When you look at the U.S. carryout up around 50 million bushels, on the world carryout, it's up from last year, but down slightly from the previous report. Bottom line in here on corn, this report's not a game changer at all. I mean, the bulls and bears can look at some small things, but there's really nothing in this report. As we get to a March corn chart in here right now, we had a nice rally from our October lows in here. It almost looks to us that we're probably putting in our winter highs in here without major issues in South America. Now, we're not bearish on corn that we got to go down to $5 a bushel, but this market's just looking a little bit tired. And that blue line on this chart is the 40-day moving average. And you can see in early December, then in January, and again today, we went down and we tested that level. That's obvious support. If we get below there, a 30-cent correction or pullback shouldn't come as a surprise. As we move over to the bean side of it in here right now, the USDA raised their yield slightly, but they had bean acres down, so production was only up 10 million bushels. The surprise to us on the bean side of it is that the exports were left unchanged. We know the USDA probably did it as they're looking towards a smaller South American crop, but on the other hand, our export pace is extremely slow. And our thinking is if we lower the South American production down, it probably could lead to an earlier start to our export program for next year's new crop. That surprised us that the USDA left exports where they're at. When we look at South American production, you need to keep in mind their crop dropped, the Brazilian, from 5.291 billion bushels down to 5.107. For reference in here, we need to remember that the U.S. raised a little over a 4.4 billion bushel bean crop. So Brazil raises almost 20% more soybeans than what we do here in the U.S. The Argentina crop dropped a little more than 100 million bushels. Okay, and as we take a step back on the entire South American production from the December report to right now, when you look at Brazil, Argentina, and Paraguay, their total crop dropped off 350 million bushels. That's significant, and the reason why prices have rallied in here right now. Looking ahead, this USDA report tells us it's all about South America. It's all about South America, and what's going to be important to watch as we move ahead are global price offers on soybeans. As we bring up a March bean chart in here right now, we've had that $2 rally since the November, December low in here. It looks to us that we're stalling out around this $14 area. What it really comes down to is, are we going to see further losses in South American production that justifies that next leg higher, or have prices stalled out in here right now? Our thinking is that the South American weather premium is really all built into this market in here right now. As we get over to the wheat side of it, ending carryout levels jumped 30 million bushels. Our exports are a little bit slow, so this isn't a big surprise. You know, we do admit, though, seeing hard red winter wheat acres up a little bit from last year, you know, surprised us a little bit. Gains in soft red winter wheat really come as no surprise, though, as we think that we're going to get more double crop bean acres in here in the southern corn belt. World carryout levels increase in here right now, and really just kind of supports the recent downtrend in the wheat prices. Bottom line, and we don't want to be doom and gloom on wheat because we do need to respect the tighter ending carryout levels than we had in previous years, but this is a non-bullish report. As we get towards the wheat chart in here right now, you can see the high put in place in March Chicago wheat in November, and here and have pulled back. We don't really see good support until you get down to the 7 to 7.25 range, and we could just end up settling front month wheat called in a $7 to an $8 trading range. We're probably not going to break out to the higher side until we can call some weather issues. But on the other hand, we're probably not going to fully fall apart either until more is known about the 22 crop. As we look to wrap things up in here, and like I said, we're trying to keep your attention on this webinar, but this is just a dull report. I mean, there just wasn't a lot there. And what it comes down to is, it's probably not going to change the near-term trends at all in the market. Okay, wheat is the weak link in here, and to me, that's the biggest change. Is over the previous months in here right now, we've seen beans go from the weak link to the strong link, and vice versa on the wheat, and corn is just still stuck in the middle. We think it all comes down to South American weather as we look ahead over the next month or two, and we are watching the prices. I mean, bottom line is Brazil beans are still offered cheaper than the U.S., and what happened a year ago in the spring of the year when there were crop issues with their second corn crop is how Brazil was able to slow its export pace down as it just rallied its prices above the U.S., so they quit selling it on the world market. That's not the case at all right now on beans. Okay, South American beans are cheap, and we're not going to get any old crop business. When we had an announced sale in here today, it was for new crop. At the end of the day, the strangest thing to us was that we didn't have bull spreading going on with beans. Both new crop beans and old crop beans are up the same 12 cents. So if this is a bullish one for old crop in here, the futures really didn't respond that way. And even though the corn market was mixed today, the same thing really occurred on corn. New crop D's corn was up a penny, while old crop March corn is down 2 cents. Now with this report, and we've said it so many times here, is a dull report. Did today's trade action on both corn and soybeans, the way new crop gained on old on corn and stayed with beans, is the market already shifting its focus to new crop and potential acreage here in the U.S. and weather? That's kind of in the back of our mind in here right now as we wrap up today's markets and look ahead to next week. Any questions, or if you have suggestions for topics, please drop us an email or give us a call. We look forward to presenting to you again here next week. Have a great day.